and I'm your host as usual. Atamarie, everyone. Welcome to the session today, our Friday session, and we're finishing with a bang. We're going to be talking about self-employment startup, and we've got Sam from the Comic Accountant, and he is an accountant. So he's going to be talking about how to get yourself, like your whole foundation, set up correctly so that you can hit the ground running. I'm really looking forward to getting some new insights and listening to his expertise. Now, we do encourage everyone to make these sessions bespoke to you, and you can do that by using the comment section, the chat function, or the Q&A function, depending on what platform you're streaming with us from. So please do drop your questions in there and get your questions answered by the experts like Sam. A little bit of a public service announcement. We do have a competition running. If you didn't see it in the newsletter or you haven't opened the newsletter, or if you stream with us on other platforms and you're not actually registered to Digital Boost officially, get registered, because you can enter in to Boost My Office, which is going to allow you to get, well, you could possibly win a MacBook Pro, a desk, a screen, and a package from Xero, all totaling about $4,000 this package. So it's like such a cool thing. All you have to do is log in to Digital Boost. And if you would like to get some extra points, you can share the link to the comp out to some other platforms, and that puts you in the draw a few more times. The competition will end on the 11th of October. That's a Monday. So you can kind of keep popping in some entries there. If you need any help making it happen, just contact support@digitalboost.co.nz and we will get you all set up so that you're in the draw. And so without further ado, thank you, Sam, for joining us this morning.
Hi, Morena. Kia ora, everybody. Hi, my name is Sam. Thanks for having me here today. It's a great honor to be here and to be able to share the skills and tips and tricks that I've picked up along the way being an accountant. Yeah.
You've got a really interesting take on accountancy as well. Like when you send out, I like receive your newsletters as I kind of got subscribed, connecting with you.
Thanks.
And you always get a little bit of a comic, and that's where that, title must come into play, is that you use your skills in illustration to push home points about different aspects of accountants, being an accountant or in the financial industry, and it makes it a bit more fun. I've got to say, it's not always deemed as the most fun area, but you really put the fun in accounting.
I put the fun in finance. That's what I do.
Oh my God, you didn't. I can't believe that. That's hilarious. You're a crack up. I am going to stop my video and I'm going to mute myself. I'll make sure that your share screen's all working as well before I go. But I'm just going to make sure that everything's working on the back end. And as questions come in, you'll see me just pop in and be like, hey, we've got a question. So Sam is happy to take questions throughout. So feel free to drop them in the chat, QA, or comment sections.
All right. Hey, thank you so much, Anna Marie. And good morning, everybody. And welcome to this session. So today what we're going to be talking about is the awesome self-employment easy quick start guide. Now, this is actually the slide version of an article I wrote a few weeks ago about how self-employed individuals can get easily set up with the right systems so that their business is growth ready as they go along. Now, as an accountant, I deal with a lot of small businesses every day. I'm a small business owner myself. And one of the struggles which I've noticed is that people often don't start right. As a small business owner, you've always got this cool, crazy idea that you want to do. You want to go off and do something awesome, and you succeed in doing it. Sales is easy to make. But then when more sales starts coming in, you get overwhelmed, you get overworked, and you often feel like, oh gosh, what am I doing wrong here? What could I have done right before? So throughout my career, I have dealt with a lot of clients, and I've helped them resolve some of these problems. And today I'm going to share with you 3 key areas where we can look at, especially when we're starting out, or even if we've already started out, we can still come back to these 3 key areas. We can get it done right, and that will give us the platform on which to grow our business correctly. So let's get stuck into it. So what we will learn today, number 1, is that we're going to be looking at mindset. Mindset's super important because everything starts in the head, right here. And mindset talks more about your whys behind starting the business. Why are you here? Why are you doing this? Why are you putting in 40, 50 hours a week working on this business? Surely there must be a reason to all this madness. And once we can establish why we are in the business, we look at what I think a lot of business trainers seem to overlook, which is financial systems. Now, financial systems are important because by the end of the day, you want your business to make money, right? This is what you want because we're running a business. We're not running a charity. So we will want to have financial systems that work. We will want to be able to track where that money is going. We want to make sure we've got enough money to pay for our taxes, to pay for our bills, to pay for any future expenses. And we obviously want enough money to support the family and put food on the table and keep the lights on and not get thrown out of our houses. Oh my God. All right. And finally, we're going to take a look at business structures. Now, business structures talks more about what sort of legal structure do we want for our business and what sort of organization structure do we want our business to grow into. And it's good to have these questions answered early on because eventually you're going to have a bunch of people that you want to run your business with you. Because for any business to be sustainable in the long run, you're going to have to want to build a team at some point. And it's good to start off thinking about what that team is going to look like in the future. Right? So everything that we learn here today is going to be relevant for you, even if you are a self-employed contractor or if you are looking to grow a multi-million-dollar business in the future. So let's start in our head with mindset. Now, the first question that we want to ask ourselves is, well, what is your why? And I think it was Simon Sinek who had this really, really famous TED talk about asking, what is your why when it comes to doing anything, starting a business, starting a new relationship, writing a book, whatever it is, you ask yourself, what is your why? Why are you doing this? Why are we investing our time, our money, our emotions into this venture? When it comes to starting a business, there can be a lot of different reasons. Now, the first reason that a lot of people start a business could very simply be financial survival, right? When I first started my business, I had just been laid off because of COVID and people weren't really hiring. This was back in March 2020 and people really weren't hiring. And so I thought, well, okay, it's not much I can do. I can't get a job. And so I started blogging. And the next thing I know, people started asking me, hey, Sam, can you do some tax returns? I'll pay you a few dollars. And I was just like, sweet, yeah. My very first tax return that I did for the business was, I think was only like $18. And I was quite prepared to take peanuts in exchange for the kind of work that I do now. But it was necessary because I still had to make money. I had to put food on the table. And that was my initial why. Now, whys can change over time, right? Whys can change over time. And maybe you might starting the business because you need the money. As you do more of the business, perhaps you might realize like, oh, okay, money is not such an issue anymore. Maybe now I'm doing this. Oh, hang on a minute. Sorry about that. Right? You might realize that, oh, maybe I'm doing this because I want to have more quality time with my family. Or maybe you're just doing this because you want to do more of what you love. All right. Say if you are an artist and you love drawing, and so you build your business around your artwork and you do more of what you love and you can monetize that. Or maybe you just want more quality time with your family. So you start a business where you're able to work from home and have that flexibility to pick up your kids from school, spend time with them, play board games with them, video games, or whatever it is that you like to do with your kids. And maybe there might be other reasons as well that you start your business. Maybe it's been your lifelong dream, for example, to set up a ziplining outfit over in Rotorua or any of the adventure spots in New Zealand. And that's always been your life passion. And perhaps maybe that's why you start your business. So the key point I want to make here is that, remember, ask yourself why. Why am I here? Why am I doing this? And establishing what your why is really, really important. And it's super, super important simply because, well, self-employment is hard. It's a hard journey. It's a hard, difficult process. No one wakes up owning their business one day and going like, oh, wow, I've got zero worries at all about my business. There isn't a time, there isn't a single moment in your life as a business owner where you're not thinking about your business, where you're not thinking about how difficult it is, where your next paycheck's going to come from, how you're going to generate sales in the coming months. And so this gives into a lot of self-doubt, and it's not uncommon to see business owners suffering from depression and anxiety and financial struggles, because not everyone who starts a business is going to become super rich. Let's face it. Not everyone's going to be a successful multi-millionaire, billionaire entrepreneur. And many of us, especially at the start, are going to struggle. And so that's why it's really, really important to always, always come back to what your why is. Because the journey towards financial confidence and business success, that's where we want to get to right there. It's a long journey, and we're going to start here, and we're going to make our way through the desert of hard work, right? On the road to success. I'm going to climb over Mount Obstacle, and we're going to get trapped in the valley of distractions. And along the way, some people are going to tell us that we're never going to make it, but we'll just tell these trolls to shut up, troll. And then we'll have a bit of a break, and we'll get there, right? And it's a hard journey. And because it's hard, it's important to always remember your why, okay? You will get distracted, you will get pulled down, and you will face setbacks on your journey. But as long as you remind yourself why you started, you'll get there eventually. All right, so hang in there. We've all been through it before, and we're gonna get there, all right? So now that we've talked about mindsets, right? And as Hnry pointed out, feel free to pop in, ask any questions. And now is probably a good time to start asking about questions. I find that a lot of people have heaps and heaps of accounting and finance related questions. And so we're gonna get straight into financial systems right now, right? And we're gonna talk all about the money, and more money. Now, the first thing you need to understand when setting up a financial system is that you do want an accounting software, right? Now, I've dealt with a lot of small business owners. They tell me like, oh yeah, my business is really small. I only make like $1,000 a month, $2,000 a month. I can't afford an accounting software. I don't need an accounting software. I can I can keep track of my finances on the back of a paper napkin or using a spreadsheet. And these are real absolute facepalm moments for me, because there is, in my opinion, as an accountant, nothing more important when you're setting up your business to make sure that you set up your financial systems right. Because it's too easy when money starts flowing in to lose track of that money. And if you lose track of money, you'll find that your money will disappear. And I've had countless clients, countless people approach me and say, like, Sam, I just can't figure out where my money's going. I don't know where it's disappearing to. And so to fix that problem, we do want to get an accounting software. And some of the accounting softwares that I recommend my clients to use are Xero and MYOB. So these are if you're based in New Zealand. Xero is arguably my favorite. I like Xero the best, right? And Xero is just a really, really awesome piece of software. It works with your bank feeds. It has great third-party app support. And it has a really great support network as well, and learning tools available for people who want to teach themselves how to use Xero. Now, the only drawback of Xero is that it's a little bit pricey. It's a little bit pricier than MYOB, and you're looking at about $60 plus GIST a month if you're looking to use Xero. If you're signed up with an accounting firm, like my firm, for example, we can sort out special pricing deals for you, and we can work out packages that suit you best. MYOB is also another good choice, right? But it's not quite as smooth to use as Xero is. It doesn't have quite as much third-party app support, but what it does have going for it is that it's a little bit cheaper at about $40 plus GIST a month. And both of them do bank feeds, which means that they connect to your bank account. So as you spend money out of your bank account on your business, the transactions will come through, and you'll be able to reconcile these transactions towards the correct accounts. And we'll talk more about accounts after this. Don't worry, we'll get there. Right? They do bank feeds. You can do invoicing through both Xero and MYOB. And you can obviously generate reports, okay, that will tell you how well your business is doing financially. Right. If you don't want to use Xero and MYOB, you can always take a look at Wave or Rounded. Now, Wave is a US-based software, and I do believe it's still free to use. Okay, it's free to use, but unfortunately, it doesn't support any New Zealand bank feeds if you're based in New Zealand. And Wave is a great little bit of accounting software. I do have a few clients who do use Wave and who insist on using Wave. It's pretty good in what it does. Rounded's another one to look at. Rounded's from Australia, and this is really, really aimed at small businesses. I can't quite remember what the pricing was, but it's definitely cheaper than Xero or MYOB, and it's still worth checking it out if you're looking for cheaper options. And of course, we have newer accounting software like FreshBooks and also Hnry. Hnry is a pretty cool accounting software. They are New Zealand. They're a New Zealand company, and they actually they automatically pay taxes for you, right? So you get set up with Hnry, and you get your clients to pay into your special Hnry account. And what happens is that Hnry basically calculates your taxes for you on your behalf and then pays that tax to the IRD. And it's a really, really great piece of software to use if you are a contractor, if you just do freelance work and you don't have a very, very complicated income stream. Where Hnry struggles is if you have anything more complex than a sole trader situation setup. So like if you're running a company, Hnry doesn't calculate the most efficient taxes for you. If you have multiple income streams, or if you're running retail, if you're running a retail type service, like a catering service, or if you're selling goods online, Hnry might also not be the best kind of software for you. And in which case, you do really actually need to engage an accountant for more better quality tax and accounting advice, right? But there you go. There's a lot of different choices when it comes to accounting software out there. And as always, feel free to send me a message on our Facebook page, send me an email, and I'm more than happy to talk you through what sort of accounting options are available for you. Now, after you've set up your accounting software, the next thing that you'll want to look at is setting up your business bank accounts. Now, especially with my clients, I'm really, really strict about this. Like, I'm super, super authoritarian when it comes to getting them to set up your business bank accounts, because my number one gripe is when business owners mix up their personal bank accounts with their business bank accounts. Now, the first thing that you want to understand as a self-employed individual or a small business owner is that your business bank account is separate from your personal bank accounts, okay? So if you already have a personal bank account set up, do not, and I repeat, do not use that bank account for your business stuff, okay? Don't get your clients to pay money into that bank account. Don't spend on your business out of that bank account, okay? Because once you start intermingling your personal stuff with your business stuff, that's when it gets harder to keep track of the money, and that's how people end up not knowing where their money is going. So let's go back to this business bank accounts now. So let's say that we've established that you don't want to put any business stuff inside your personal bank accounts. You want to put everything through your business bank accounts. So the first business bank account that you want to set up is your daily spending. It's this one here. And your daily spending talks about any income that you get from your clients, okay, and any expenses that you spend on the business. So let's say you're a lawyer and you get paid for whatever consulting work that you do, and you get paid $1,000. And so that $1,000 is going to come into here. Right? And let's say you're spending on expenses. Let's say you're spending on expenses. Okay. And so in those expenses are going to come out of your daily spending as well. Okay. So you're going to spend on things like your rent, if you're renting an office, and you're going to spend on things like subscriptions. Say if you subscribe to legal journals or any other sort of legal services out there. If you have a website, okay, you're going to pay for it from out of your daily spending account. Okay, so your daily spending is for all your income and expenses. And if you've already hooked this up to an accounting system, the bank feeds will come through and you'll see exactly what money is coming in, where to categorize that money, all right? And when you spend money out of your business bank account, you can also see where that money is going to. So you definitely want a debit card associated with this account, all right? And the debit card will allow you to make online purchases and other purchases using the business bank account. Now, the second bank account that you want to set up is your income tax account. Now, one of the biggest problems that I've encountered when I'm dealing with clients, especially at the end of the financial year, and this was true when I was working for other accounting firms especially, was that whenever it comes to tax time, they're always like, oh, but I've got no money set aside for taxes. and I've got no money in my bank account. Why do I have to pay taxes, right? And I think a lot of this is because, well, number one, maybe people don't understand how tax works. And number two is just that in general, accounting firms don't advise their clients on putting money away for taxes. So if you're a client in my firm, I will actually tell you how much money in no uncertain terms to put away for taxes. Yeah. Oh, hi, Anna.
Hi, we've got a question.
Yep.
So I just wanted to pop this in. It says, Kia ora, Naomi. Totally makes sense not to mix up personal income and business income. But recently I learned that as a sole trader, I must declare any type of income, even if it's not related to my business. So there's no difference when it gets to income tax. Am I correct?
Yep. And so,
And
yes,
how does
was it
this work?
Naomi?
Yeah.
Was it Naomi who asked? Yeah. So Naomi, you're absolutely correct. So as a sole trader, all different income types, whether it's from investments or rental properties or your own business, gets taxed under your name, right? And from a tax point of view, it all gets lumped together, right? But from a business point of view, you still want to keep your business accounts separate from your personal accounts, because, and this is really so that you can run your business more efficiently and more effectively. So you know exactly how much money you're making from your business, right? And you can use that information to make better decisions about your business in terms of, oh, how can I increase my sales? Or what strategies can I take to reduce my expenses? Or I'm making this amount of money for my business. How much of that can I put away to save for business expansion in the future, right? Because ultimately, your business income is not going to be affected by your investment income or your rental income, even though by the end of the day, all of it gets combined together and you submit that to the IRD. You still want to keep track of how much you're earning from your business. And from a tax point of view as well, you do declare self-employed or business income separately from investment and rental income. So you still want to keep track of it separately anyway.
Cool. At what point would you start paying yourself? Good question, Charlotte.
That's an amazing question. In fact, it's so amazing that we've actually written an article about it on our website.
Cool.
And we're also in the process of developing a really easy, simple one-session training, just an hour and a half with us and you, where we can help you as a business owner work through how much you can pay yourself each week. So it's actually a training that we're going to be rolling out soon. And if you are subscribed to our newsletter and if you like our Facebook page, you'll see that when that happens.
Yeah, cool. Because that is a longer session. You know, sometimes we can't fit all of that in.
Yeah, it would be a longer session.
Yeah.
We you probably have to call me back here again, and we run another session on that.
Okay. Well, that sounds like a plan as well. I love that idea.
Yeah. I could do a quick session on how to pay yourself as a small business owner. Yep.
Woo. Okay, I'm dropping off. I'll let you keep going.
Okay. Yeah. So coming back to setting up your business bank accounts, right? So let's take a look at income tax. Now, tax is important. Okay, we live in a country where we enjoy a very, very high standard of living because of the taxes that we pay. And so when it comes to putting away money for income tax, my general advice is to put away 20% of whatever that you earn in here, right? Whatever you earn from your income, just put 20% of it into a special account set up purposely to put money away for income taxes. Okay, so we call this the income tax account, right? And so 20% of whatever you make here goes into this account right here. Okay, no questions asked. Before you even spend that money, put it away, remove the temptation. Okay, and following on from that, we want to put 15% of our income into GST. Why 15%? Because we are charged 15% on the gross sales of whatever income that we make for GST. Okay, and we'll talk a bit more about income tax and GST in the coming slides. But for now, just remember that we want a separate account set up for GST as well. Okay, we don't want to be lumping up GST and income tax together, right? We want a separate account for GST, and this is money for GST. And as we will learn later, money that you get for your GST actually isn't money that belongs to you. Okay, it's money that belongs to the government. You're just simply collecting that money on behalf of the government, right? And that's GST. And finally, all right, we do want to be putting some money into what I like to call our war chest. All right, and our war chest is where we keep money for long-term business growth. Okay, now we obviously want to pay ourselves from the business, and we're going to be paying ourselves from here as well, right? So from our daily spending accounts. But at the end of the day, or at the end of the month or week, or how often you pay yourself, 10% of whatever's left inside your daily spending, okay, 10% of that should be going into your war chest. And I'll just draw another arrow up here just to emphasize the point that you do want to be putting at least about 10% of whatever's left inside your daily spending account into your war chest. And that's money for long-term growth. And when I say long-term growth here, I mean things like new systems. Let's say if you want a new marketing system, or a new PC, or a new printer, or a new home office setup, right? You could use that to invest in coaching and training. Okay. You could use that money to, say, for example, product development, right? If you want to develop a new product, for example, right? And so basically the money in the war chest is used mainly for business expansion purposes, business expansion and upskilling, right? And so in a nutshell, those are the 4 business bank accounts that you want to have set up, all right? At the bare minimum, if you don't feel like setting up 4 bank accounts, at the bare minimum, you should have at least a daily spending, right? And an income tax account set up. Okay, these 2 would be arguably the most 2 important bank accounts to set up, all right? But setting up bank accounts are pretty cheap. If you're a sole trader, you can open up personal accounts for next to nothing, right? And if you are looking at using business bank accounts, you can always have a discussion with your bank on how you can save bank fees on setting up these additional bank accounts. All right, cool. And feel free to stop and ask me questions at any time, okay? So now that we've sorted out our business bank accounts, let's take a look at some basic accounting concepts. Now, these are, oh, hi, Hnry.
So there's 2 questions here. It says, can you pay yourself a wage when you're a business at a loss? Oh, good question.
That's an absolutely good question. And to answer that question, I am going to say yes and no. Yes, okay. Yes, if you are set up as an employee under your business, and this means, and now I need to be really, really specific here. If you're set up as an employee under your business, that means that your business is set up as a company. So let's say I set up a company called Sam Limited, right? And Sam Limited is registered as an employer. So me, myself, Sam Harith, I can be an employee of this business, and I can pay myself a PAYE salary, which is a regular salary that you get from working for a company. But it also means that I need to draw myself up an employment contract. I need to abide by the employment laws of the country, and I need to pay myself at the very least a minimum wage, right? So there's a lot of legal kerfuffle that you need to go through if you want to register yourself as an employee of your business, okay? And if it turns out that you're paying yourself more money than what the business is actually making, then yes, you could be paying yourself if the business is making a loss, all right? If you are not employing yourself, then you would only be taking out drawings, otherwise known as a shareholder salary from your business, okay, if you're running a company. And if you're only taking drawings from your business, then logic dictates that you can only pay yourself whatever money's there. So if there's no money, then you can't pay yourself. Okay. Right. And
Awesome.
yeah.
You make it all so easy to understand. We
Oh,
appreciate
thanks. That's what I'm here for. Yeah. Right. So coming back to basic accounting concepts. So these are really basic as accounting concepts that every self-employed person, every small business owner needs to know. Okay. So first of all, we're going to take a look at income. All right. So income is your money received from products and services sold. It's also known as revenue or sales. So this is money in. So money in, it comes from the top here. All right. Okay. So once you've got your income, then you want to look at your expenses. And expenses are money spent on things to keep your business running. So if you're in retail, this is buying stock. This is paying for the utilities, keeping the power on, paying any of your subcontractors. If you've got any freelancers doing work for you, paying for Google ads, for Facebook ads, paying to keep your website up and running, paying to do literally everything that you need to do to keep your business running is considered an expense. Okay, and this is money out. Okay, money going out of your business. And finally, you have profit at the very end. Profit, also known in shorthand as PI, in accounting shorthand, which is your income minus expenses, right? And so when it comes to tax time, this is the figure right here that the tax man is going to look at. This figure is a figure that the tax man is going to look at. Okay. And a percentage of this will go towards your taxes. Okay. And so remember, yeah. Income minus expenses is profits. All right. Yes.
Cool. Question here, is a referral fee an expense?
A referral fee?
Yeah.
Meaning that, say if you paid your accountant 10% of your sales if they sent a customer over to you, is that it?
Yeah, I guess maybe elaborate on that question and we'll get it answered for you. Oh, yes, that's correct. That's what they're.
So yeah, a referral fee is no different from paying someone a commission to sell products on your behalf. And the litmus test that we use from a tax point of view to determine if something is a business expense or not. So the first question that you need to ask yourself is, does me spending money on this thing help me generate more money for my business? And nine times out of 10, if you can say yes to that, then it probably is a business expense. So paying someone a referral fee because they're helping bring money into your business counts as a business expense because it's money that you're spending on helping to generate income for your business. You see?
Yeah, that makes sense. Great.
All right, cool. So those are the basic accounting concepts of income, expenses, and profit that you need to understand. And I might just add in here as well that profit, okay, profit, excuse me, right, profit here is not the same as cash. All right, now profit isn't cash, okay? Profit is simply income minus expenses and you get your profit, okay? Cash is different. Cash is an asset, all right? So now we're going to talk about assets, liabilities, and equity. And in accounting speak, we call these things, we call them the balance sheet items, all right? So these give an overall indicator of your business health or how well your business will be doing in the long term. Now, the first thing that we want to look at is assets. Now, most people would be familiar with the concept of assets. Assets are the stuff that helps make money for your business. And yes, cash is an asset too, because cash is the most liquid asset of them all. You can convert cash into other assets that will help you make more money, which will give you more cash, right? So cash is an asset, and cash is probably the most important asset that all businesses want to have. Now, the anti-asset, as I like to call it, or the antithesis to the asset, is a liability. A liability is a promise to pay on a future obligation. Now, that's just really, really fancy accounting speak for anything and everything that covers loans, credit cards, supplier credits, bank overdrafts, and literally anything that's designed to take money out of your pocket in the future, right? So those are known as liabilities, okay? And over here in the corner here, we have our little friend called equity. And equity is something that most small business owners would have never heard of before, because this is actually the money that you invest as an owner into the business. Okay, this can be your money, your time, your energy, your resources that you put into the business to get it up and running. Okay, and whatever profit that you make, so remember profit, income minus expenses, whatever profit you make at the end of the year is added to your equity. So let's say if you start off with $1,000 of investments, right? And you make another $1,000 of profit for the year. So therefore, you would say that you'd have $2,000 of equity by the end of the year, to keep it really simple, okay? So from an accounting point of view, assets equals to liabilities plus equity. And this is why we call it the balance sheet, because your total liabilities plus your total equity will always be the same as your total money value of your assets, okay? So this is to say that when you take out a bank loan and you get $10,000 cash from the bank, yeah, you've got $10,000 cash, but guess what? You've also got $10,000 worth of liability. If you put in $2,000 cash into your business, hooray, you've got another $2,000 cash in your business in terms of assets, but you also have $2,000 that represents your personal investment, your equity in the business as well. Of course, in practice, it's a lot more complicated than that. But no matter how complex your business is, no matter how big it is, no matter how many billions of dollars that you're making in terms of sales, your assets will always be the same as your liability and equity. And there is nothing in the world that can ever change that.
Man, I feel like I'm at school right now. This is so good. Okay, so there is a question here.
Well, there'd be more fun than school, wouldn't it?
I surprisingly am not a numbers person, but really love talking about tax and accounting. So there's a question here. It says, as a sole trader, is there a checklist of what household expenses can be claimed for a business use of home? And if so, how should each type of shared expense be calculated? E.g. electricity, water, rates, etc. Cheers.
All right. Absolutely amazing question. It's a really, really good question. We, not surprisingly, have an article about claiming home office expenses on our blog as well. And to keep it really simple, you can claim what is known as a home office percentage of your home office. And so let's say you use 10 square meters for your home office and your house is 100 square meters, right? So we can make a 10% claim. And so that's 10% of your power bills, 10% of your rent, 10% of your repairs and maintenance on the house, 10% of, let's see, what else is there? Of your mortgage interest.
Okay.
Like if you have your own home and you're paying interest on your mortgage, you can claim 10% of that. You can also claim up to 50% of your internet and phone, right? And we've written a pretty cool article about this on our website, so you can go check it out. Just search home office expenses on samharith.com.
I've actually dropped your website into the chat. So if you guys want to, after this session, jump over to his website, you can check out that blog post. I've also dropped in links to all of the accounting software that he has mentioned. So then Charlie's asked a question here, a follow-up question. How do you calculate office space if you're renting and the bills are split between the flat? Oh, that's a good question.
So you'd only look at what your portion of the expenses is, right? So you look at what you are actually physically spending yourself out of your own pocket. So when it comes to your own domicile, so your own home, you would be spending from your personal account. So even if you're living in a shared flat, you need to look at what your share of the expenses is. And so let's say you're paying $300 a month and that covers your rent, your power, and everything else. Then you want to be taking 10% out of that $300 a month that you're paying.
Yeah, man, you wouldn't get that in Auckland, but yeah.
Hey, I'm living in Hamilton, man.
Oh, that's
Yeah.
awesome. These are such great questions, guys, that you guys are dropping in here, because as small business owners, this is an area where we really probably have a lot of questions. Keep dropping them in the chat.
All right, awesome. And yeah, so if you're a client with our accounting firm as well, we actually do have a handy little form that you can fill out to help you claim your home office expenses. And it's a really simple form that we use. There's a series of questions. You just put in the numbers and boom, we've got it all sorted out for you, and we can make that claim for you easy. All right. All right. Any more questions about home office expenses before I go on to everyone's favorite topic, which is taxes?
I don't see any dropping in now. So
Okay.
yeah, maybe, yeah.
All right. So let's take a look at understanding taxes. So now taxes, everyone loves taxes, right? So the first tax we're going to look at is income tax. Now, income tax is calculated based on a percentage of your profit. Okay, and we like to call this our taxable income. And this is calculated at the end of the financial year, right? It's 28% flat for companies. So meaning that if you make a profit of $100,000 for your company, you're going to be paying $28,000 worth of taxes. If you are an individual or a sole trader, this is a scale rate of 10.5% to 39% for individuals. Now, 39% only applies on income above $180,000. But this doesn't mean that if you're making $200,000 a year that you get slapped to the 39% tax rate on all $200,000. It's calculated at a scale rate which goes like 10.5% for the first 14K, and that it's 17.5% for the next 22K, and so on and so forth. So your actual effective tax rate, if you're making about $200,000 a year, is actually closer to about 29%, and not 39%. And if you need more information about how the scale rate works, again, you can search our blog for income tax NZ or tax NZ, and we've got heaps and heaps of articles about understanding taxes on our website. The next thing you need to understand is GST, or goods and services taxes. And this is calculated at 15% of gross sales income. So if you have sales of $1,000, you will add on 15% of GST onto those $1,000. Okay. And the biggest thing that you need to understand about GST is that this is a tax on your customers. Like, you collect the tax for the government and you pay it back to the tax department. Now, one of the biggest things that I've found that when I'm dealing with small business owners, and they go like, oh man, I'm getting taxed twice. I'm having to pay income tax and then GST. Well, the thing is that income tax, yeah, sure, it's tax on your income, all right? But GST isn't tax on your income, because if you're making sales of $1,000, you're still making a sales of $1,000. That 15% that you add on is simply tax that you're collecting from the consumer, which you then return to the government. Okay. Now, you can offset GST that you collect from your clients with GST that you pay to your suppliers, and that helps you pay less GST, right? But if you want to learn about this in more detail, you can always check out our website, or you can organize a free catch up with me later.
So when you're charging your clients, so a lot of small business owners will just say, oh, this is $65, right? It's just a flat rate. So when you're putting that number out there as what you're charging for your item, should you be basically embedding that cost into that rate?
That's a really good question. To answer that question, it really depends on the nature of your business industry. Okay. It's quite common for retailers to embed the cost of GST within their list price. So, which is why if you go to places like Farmers or Pack and Save or literally any retail outlet, all their prices are what are known as GST inclusive. Okay, so GST inclusive means that GST is calculated in the price. So it's already in the price that you pay, right? And you'll find that most service businesses have it as GST exclusive. Like if you go to lawyers, accountants, freelancers, they'll always bill you at an exclusive rate. So they will always go like $100 plus GST, which means that you're paying them $100 plus $15 extra for their services. So that really depends on the nature of the business. My advice to my clients is to never eat into your profit margins to get your clients a nice GST inclusive price, because then you're just reducing your own sales. But again, some clients feel like they want to give their customers a good price, so they're quite happy to take that GST hit for their customers, which I don't really think is a great idea.
So, okay. So that's interesting. So, so maybe like the approach is like, okay, this item is $65 plus GST, instead of going, all the items, look, I'm not good at math. Let's just put it out there. Say it was like, instead of charging 65, oh, this item's 72. And then you've already put it into the price.
Yeah.
Okay.
Yeah.
So you're saying don't do that. Put it outside.
Well, I'm not saying don't do that. I'm saying that if you're in retail, often that's what you do.
Okay.
Right. So if you have a list price for, say, a hard disk drive, an external hard disk drive, and you've got a list price for $100 for that, so your GST inclusive price would be $115.
Okay.
And so if you're selling retail, that's what you do. But you always put, $115 GST inclusive, right?
Okay. So they know that's
so they know.
Yeah. Okay.
But what I'm saying is that don't take your $100 item and reduce it to $90 so that you can have a nice round figure of $100, which includes GST. That's what I'm saying. So don't eat into your own profit margins just to get that nice GST inclusive price.
Okay, I get you. Okay, there's a couple of questions here. One says, we're doing short-term rental accommodation, Airbnb and Book a Batch, but we're not charging GST. Is this okay?
Yep. So for residential rentals or short-term rentals, it's actually one of the things which don't constitute a GST taxable activity, right? So if you are a landlord and you rent out your property, so these sort of things don't fall under a taxable activity for GST. Yeah. So interestingly enough.
Well, then you're all good there.
Yeah.
Okay, so wow, we've got lots of questions coming in now. Woohoo! I bet you knew that was going to happen. Okay, what are the rules around petty cash in a small business? How do you record small purchases? And are there rules around what can be petty cash?
So the simplest way to approach this is to simply, if you want to, you can set up a fifth bank account. You can call it petty cash, right? And inside this fifth bank account is basically you put in a small amount of money. So you only have like about $100 or $200 in there at any time. And you can get an FPOS card or another debit card associated with this account. Link up this account with your accounting software and you can spend it to your heart's content, right? You can spend as much as you want. From there, everything will be recorded in your accounting software and you can declare everything as an expense. There is no limit to how much you can claim or you can't claim. So long as it relates to the running of your business, you can continue making that claim.
Okay, cool. Another question. What happens if my revenue is under 60K and my business is not registered as a company? Is it okay if I don't charge GST?
Yeah, definitely. So it's only compulsory to be GST registered if you're making a turnover of $60,000 or more in a year. If you're making less than that, you don't have to be GST registered. But remember that if you're not GST registered, it's illegal to be charging GST onto your customers. And similarly, you can't be claiming back any GST on stuff that you pay for through your business if you're not GST registered.
a lot of small business owners have a job and a small business. In regards to GST there, if your income was, say, $40,000 that you had to pay, you got paid from an employer, and your small business, say, made $25,000, so total that year you had $65,000 in income, are you liable for the GST on your small business?
So GST is only calculated based on income received from GST taxable activities, right? So an income that you receive from your employer is considered a non-GST taxable activity, right? So you'd only count the $25,000, which is related to your small business, which is a GST taxable activity.
Cool. Okay. Another question here. I charge an initial assessment fee as a client onboarding fee, but then once they settle on a contract through me, I reimburse it to them as I am paid by a product provider. Should I be charging GST on the initial client onboarding and assessment fee?
That's a tricky question. That's a tricky question. But to keep it simple, the first question, I'm probably going to pose a question back here. Do you pay GST on the, sorry, do you get paid from the provider? Do you get paid including GST? So rather, is your provider GST registered?
Okay. All right. So that's your question for you. Who's popped that in there? And oh wait, hold on. Yes, they do.
Yes. Okay. In which case, then yes. In which case, bill your client with the GST component. All right. And then when you reimburse your client, make sure you have that same GST component in there as well. So effectively, what's going to happen is that the GST that you collect from them is going to be offset with the GST that you pay out to them. So that effectively eliminates whatever GST that you incur. But from a transactional point of view, you do still want to be recording that GST.
Okay. Question here. I've come in late to this webinar. I'm not sure if this has been asked. What would a small business expect to pay an accountant yearly for services? Some would be done myself, like GST returns. Thanks.
Yep.
So feel free, Sam,
I'll answer that question. I'll answer that question later, because I will be talking about my accounting firm and the prices that we charge. And I'm sure I can answer that question a lot better once we get to that slide.
Okay. And we can always say that some things can be answered offline, because sometimes it's better to speak with somebody individually about that kind of thing. And that's totally okay.
Yeah, that too. All right. So if there are no more questions, we can move. Can we move on?
We're good. And we're getting like right to the end of the session. So we
might
have to do a part 2 on this. I'm thinking.
Yeah. Right. Cool. So I guess I wish I would have liked to have a bit more time to spend on business structures, but I guess there were quite a lot of burning questions around the area of accounting and tax, as is always the case. But let's take a look at business structures. And business structures, really, we're talking about how do we want our business to look like in the future? And so how do we best set that up? So first of all, we want to take a look at legal structures. Now, most businesses are going to start off as a sole trader. You are the business and you pay taxes in your own name. It's really, really simple. Okay. If you're trading as Sam Harith, then you are Sam Harith, the trader, for example. Now, the next step up from a sole trader is a partnership, where you have got like 2 or more sole traders working together. And like, I'll be honest, it's a pretty lame structure. It doesn't really accord you any special benefits. And the tax treatment is a lot more complicated, because partnerships don't pay taxes, but the individual partners have to pay taxes. And you got to work out what portion belongs to which partner in the partnership. And it's a huge mess. And finally, we've got companies. Now, companies are the logical growth step, and they offer certain perks that being a sole trader doesn't offer. And this includes things like limited liability, being protected from the liabilities of your company and people that your company owes money to. And you also get other certain perks like tax planning, for example, and the ability to sell shares in your business to your business partners and so on. Now, apart from legal structures, let's talk a little bit about organizational structure, okay? Because when you're starting off the business, now you're going to be here, right? And you're also going to be doing this and this and this. and this as well, okay, when you're starting up the business. At the beginning, this is easy. You can be the CEO, which is the Chief Executive Officer. You can be the Chief Operations Officer. And you can also be the Chief Finance Officer as well. All right. And you're going to have to wear all of these hats at the same time. Now, as your business grows, though, you'll find that you can't do this all yourself. And so you'll want to think about, okay, what are the different roles and responsibilities of a CEO, right? Strategy, planning. What do you do in operations? Stock management, production, etc. What do you do in the marketing, branding, ads, etc. What do you do in the sales? How do you close sales? How do you do pitches and so on, right? Finance, you need to organize your invoicing, your financial reports, and so on and so forth. And it's really overwhelming for one person to do it on their own, which is why to start off your business, you do want to put down that organizational structure. You do want to have it on paper, and you do want to be able to envision what the different roles in your business are and how you can look at filling them. And I'll just share you really quickly what my business's organizational structure looks like. And as you can see, I've just got it down on a piece of paper as well. And so at the top here is the CEO, and that's me. And I'm in charge of planning and strategy and all that. And then I've got HR, legal, and admin. And the little O next to them means that I'm looking to outsource these things. So just these can be outsourced, right? Finances, and accounting and forecasting. So anything with a little S next to them, those are things I want to do. And under marketing, we've got comms, ads, engagement, social media. And I'm still here doing content because I just love writing and drawing, right? And under sales, we've got comms, consultations, conversions, follows up, customer relationship management, bookkeeping, tax returns, GST, end of year taxes, training, consulting, etc. Right? And so all of this falls under our organizational structures, sales and operations stuff. And so as our team grows, I'm looking for people to fill in these roles. Now, I'm doing most of this myself, but as my team grows, like I've got a guy doing marketing right now, and I've got a guy who's helping out with operations right now. And eventually I want to train these guys to do more things within the business. But the idea here is that you want to start off with a vision of what that organization structure is going to look like, so that when the time comes and when you start bringing in people into the team, you know exactly where to put them, you know exactly where to slot them, and you know exactly what they need to do in order to keep that business engine running. All right, cool. Any questions?
Nope.
Okay. And so that brings us to the end of the slides. We're a little bit over time, but I still just want to say a few more things. Self-employment is a hard journey. So always stay positive, okay? And remember that no matter how bad it gets, you want to be happy. You want to be happy with your business. You want to be happy with the work that you're doing, and you want to be happy with where you are in life and where you're going to be in life. And finally, if it doesn't work out, keep trying. Do something else. Keep going. Just keep pushing, keep chipping at it, all right? And eventually, we'll all fly as a self-employed individual. Cool. So before we end, I want to talk a little bit about the self-employment startup training that we're running over at SH Advisory. It's a 4-week course. It's a 4-week course. We'll cover the basics of self-employment. It's basically everything that we've done so far, but it's over a 4-week course, and we're going to be super detailed about it. And we're going to help you and your business work through those steps, right? And we're going to be opening up the first lot of enrollments for this in mid-October. So definitely subscribe to our newsletter, like our Facebook page, and we will update you when that happens. And we're going to open up the first round to only 10 businesses. And we're targeting to start this in November 2021. And it will be at a reasonable price. I promise I'm not going to make you pay with your arm and your legs for this, okay? if you're looking for accounting services, and here's to help answer that question that someone posed earlier about how much can I expect to pay for accounting services? So we only charge 1%. No. Sorry, that just kind of jumped. Hang on a minute, just give me a quick moment. And let me start that back up. Okay, can everyone see this? Yeah.
Yep.
Okay, so it's 1% of sales for income tax and GST. And that means that, so if you are making, say, about $60,000 a year, you can look at paying $600 for our accounting services. Okay, so that scales with your sales, that rhymes, which is deliberate. Okay, we do charge a minimum fee of, $30 a month, which is also $360 a year. Okay, and we have a max cap. So we cap our fees at $3,500 a year. So meaning that if you're making more than $350,000 a year, you're not going to be paying any more than $3,500. And of course, all prices plus GST, all right? So all prices are GST exclusive, okay? And so this 1% gets you frequent communication. You get bi-monthly reports that tell you your tax position, how much you need to put away for taxes. It tells you how your business is doing, right? You get unlimited tax, accounting, and financial advice, within reason. And you get automatically subscribed to our newsletter as well, and you get awesome comics and weekly updates on small business news as well, right? Check out our professional website at shadvisory.co.nz and book in a free consultation with me, and we're quite happy to walk you through the process. Yep.
We
of
did
course.
have one more question, but
Yep.
I was just looking up your website. Let me come back. Okay. As a startup, are you hiring the staff as employees or contractors?
Good question. So yes, as a startup, I'm bringing on contractors at the moment, right? And so these guys work for me on a part-time basis, okay? And contractors are always the best way to go when you're first starting out. You may want to consider getting employees in the future once you start giving your team more responsibilities and they start to represent your business, and if you don't want to allow them to work for other businesses, then you do want to consider bringing them on as an employee. But bearing in mind that bringing them on as an employee also means that you need to be aware of the rules and regulations that surround being an employer, meaning that you need to be registered as an employer, you need to be paying taxes on their behalf, and you also need to make sure that you're complying with the rules and regulations as set out in the Employment Act.
Perfect. Yeah. Okay. And we won't take any more questions just because we are over, but I just want to say how amazing this session has been. It's been so great. We've been getting lots of positive feedback on the other channels as well. It says, and here's another one. Thanks very much for your info, Sam. The upcoming course sounds good. And your fees too. Yeah, totally. And yeah, very helpful, fantastic session, very helpful. Thank you so much. Yeah, just like lots of really great feedback here for you, Sam. Honestly, this session was so comprehensive. I learned so much. I know, and I'm seeing that everyone else did as well. I'd love to delve into maybe a follow-up session with what we were talking about earlier.
Pay yourself?
Yeah, how to pay yourself. I think that would be really cool.
Yeah, that would definitely be a whole session on its own.
Yeah, so that would be really cool. I'll connect with you about that. And you are happy to submit this slideshow as like a learning summary, aren't you?
Easy.
Yeah, cool. If you flick that through to me as an email, there were some folks that requested that so they didn't have to take notes.
Sure thing.
We will.
Do you want me to send it through you with the annotations on it, with all the scribbles on it?
Oh,
or without?
if you're able to, that would be awesome. Yeah, wow. Okay, that's really cool. Yeah, that would be really great. And those will be uploaded. So if you're streaming with us on Facebook or something, you'll need to go to the website to be able to get access to this. underneath some of our sessions that we upload a PDF that is a learning summary. And you can download it. So it like makes it, if you've watched the session, sometimes you can just like get the PDF and it reminds you of the key points that you were interested in. That's great. Sam, this is me. My mind's just been blown. Yeah. Such a great session.
Oh, thank you so much.
Yeah.
Thank you so much. Now, before we end the session, I
Yeah.
do just have one comic that I want to share with the
Cool.
team out there. So this is the origin story of how I started my business over here. All right.
Cool.
Yeah.
I love it. I'm a
Yeah.
slow read. That's awesome. Look, I love your initiative and you're so organized. It's amazing. And but at the same time you put the fun in finance.
I do put the fun in finance. Yeah.
Good job, Sam. This has been an awesome session.
So
Guys, I hope
thanks.
you enjoyed this session as much as I did. And I'd really love to have you back on again, honestly.
Oh, and I'd love to be back here again. And yeah, and as always, please do like our Facebook page and subscribe to our newsletter. And we'll see more of each other in the future.
Yes.
Stay positive, team. Stay positive.
Stay positive. Have a wonderful weekend, everybody. Ka kite. And we will